Okay, so money management part 2, that's what we're talking about today. As we already know, trading is high risk, which means that, you know, and I hope you all never forget that anytime you trade, there's a 60% chance you're going to lose money and a 40% chance you're going to make money every single time you trade. So, never ever forget that trading is high risk. You're never going to get 100% success rate. You're not even going to get a 70% success rate. So always remember that losses are inevitable. Whether you like it or not, losses are inevitable. So that's, I'm not going to go over the main session on money management. We went through all that during the course. But yeah, it's just to remind you that, 60% of your trades are going to be losing trades and 40% are going to be successful trades. Obviously, provided you're consistent, provided you stick to your plan. But always remember, losses are inevitable. So what we're going to be talking about today is, how you can then start to use the money management and especially if you want to start trading multiple markets. So I'll bring up the spreadsheet, which you should all have the spreadsheet. Obviously, if you don't have it, do let me know. I can always post it on the platform again, but you should all have the spreadsheet. And this is what we're going to be discussing in more detail today. So like we said, with money management, the way to be profitable, despite the 40% success rate, is to have a minimum risk to reward ratio of 1 to 3. So you always want to make 3 times what you're risking, basically. And as you all know, I tend to use a stop loss of 20 pips for my day trading and going for a profit of 60 pips. So let's start with the beginners. So with the beginners, like I said, which is what we're doing on the platform now, I funded my IG Live account with £500, and I've been trading that account for, I think, since last week, Monday. So that's the account that we've been trading live together since last week, Monday, where I put in £500 into the live account and be trading that. And like I said, as you know, with that one, I'm risking 50p per pip per trade, using a stop loss of 20 pips and a profit limit of 60 pips. So let me bring up the whiteboard. And obviously, you already know all this by now, that, even with a 60% failure rate, you can still have a profitable trading overall, provided you have 4 successful trades and you limit your losses when you have those 6 losses. But we're going to take each of this from beginners, intermediate, and advanced. We're going to take each of them step by step. So we'll start with the beginners. Let me bring up the whiteboard. So like I said, we're currently starting with £500. And like I said, we're risking 0.5, a volume of 0.5, which is the IG platform. So again, like I said, make sure you check with your own platform, because I know there are people from Canada, USA, Nigeria on this platform and on this call. So I always try and remind you, do check with your own live, the provider of your live trading account, to make sure you're using the correct volume on your own platform wherever you are in the world, whether you're in Canada, America, Nigeria. But like I said, the IG platform I'm currently using on the online platform is the UK IG spread bet account, and on the UK IG spread bet account, a volume of 0.5 is equivalent to me risking 50p per pip. Okay, so that's what I am currently doing. Okay, so with the £500 I put in the account, I'm doing a volume of 0.5 on on the IG Live spread bet account, and that means I'm risking 50p per pip, and with a stop loss of 20 pips. So 20 times 50, I'm basically risking £10 per trade. So I'm risking £10 per trade. So that's my maximum loss should be £10 per trade. Now that you know that, with money management, that's what you want to lose per trade, is £10 per trade. Now, if you want, you can still carry on sticking to one market, which is the Euro US dollar, and then you can risk the whole £10. You can risk the whole £10 per trade on Euro US dollar, or you could split it into two markets. Or you could split it into two markets, and then say, okay, let me also trade pound dollar. And then if you're trading pound dollar, you can now say, okay, I'll do 0.25 and 0.25. So basically, you're going to split that volume of 0.5 into two. So you'd be basically risking 25p for each market. So you can see this is still, you trading these two markets will still be regarded as one trade, because you're still risking a total of £10 per trade. So you can break it up, that 0.5 volume, into 0.25, 0.25, and trade these two markets. And even if you lose out on both of them, you're still only lost £10. Or you could even break it down to three markets and say, okay, let me trade dollar yen. So you can now say, you can now trade three markets, and now you can do 0.2, 0.2, and then 0.1. So you can do 10p per pip here, 20p per pip here, 20p per pip here, and it will all still be classified as one trade. So you can see this is just the beauty about money management. Once you understand the maximum you can risk, you can now start to play around with it. Okay, so, and the reason why I'm doing this today now, because from next week, you might notice I will start trading more markets on that IG Live account. So like I said, if you're using £500, the maximum you want to risk per pip is, like I said, on the IG UK spread bet account, you want to use a volume of 0.5, which means you're risking 50p per pip. And like I said, if you're risking 50p per pip, that means you're with a 20 pip stop loss. That means you're risking £10. So that's your maximum that you can risk per trade. So like I said, you can either just decide to use your whole allotment of your risk on one market and just stick with the Euro US dollar, or you can split it into two, or you can split it into three. But be mindful, you splitting into two markets or three markets will be dependent on whether you are comfortable analyzing two or three markets. So, don't rush to start trading two or three markets if you're still struggling just to analyze one market. So again, the aim of trading is to trade well. So again, if you're a beginner and you're still struggling with chart analysis and placing trades, then it's advisable you just stick to one market, preferably the Euro US dollar, because it's the most widely traded currency pair. And then stick to that. And then when you feel you're very good at analyzing the market, analyzing the charts, sticking to your plan, placing your trades and all that, then you can start thinking about, maybe trading 2 or 3 markets. Because the more markets you trade, the quicker you have to be with your analysis and reacting to the market. And of course, there'll be more reports you have to be wary about depending on the markets you choose to trade. So be very careful. You just might be giving yourself more work, and you need to be prepared for the more work. So like I said, what I'll probably be doing from next week is I'll be trading 3 markets, which would be the Euro USD, the dollar yen, and the pound dollar. So these are the 3 markets I'll start trading next week on that live account. And like I said, for the Euro US dollar, I'll be doing a volume of 0.2. For the dollar yen, I'll do a volume of 0.2. And then for the pound dollar, I'll do a volume of 0.1. So I'll basically be risking 20p per pip for the Euro US dollar. And then I'll be doing 20p per pip for the dollar yen and doing only 10p per pip for the pound dollar. And you can see that's still a total of 50p. So this will all still be regarded as one trade. That will just be one trade. Now, the reason why I'm doing 10p per pip for pound dollar, and again, this is where experience comes in. And, you know, like I said, there's no substitute for that. There's certain things you just have to experience yourself. And like I said, you know, when it comes to trading, the only way you can become a good trader is by you trading on a daily basis. But most importantly, while you're trading, is to be observant. Try and make observations and notice things and notice how the market reacts to certain reports, how the market reacts to certain things. You know, you have to start to make all these deductions for yourself and begin to see how things are happening. So, for example, now the pound dollar is an extremely volatile currency pair. It's very volatile. So it's not a sort of market you want to trade if you're not very good at trading in terms of knowing what to do, how to react, because it's a very volatile market. It's up and down very fast. It will take you in and take you out of the market very quickly. So it can be profitable because when it moves, you can get huge moves with the pound dollar, but at the same time, you can lose a lot of money with the pound dollar because it's extremely unpredictable and extremely volatile. So that's why, and then the dollar yen is on the opposite end of the spectrum. The dollar yen is not as volatile, it's very slow. So you might be lucky if you get 2 attempts at the dollar yen in a day. So it's very slow that way. So it's very important you understand that. So that's actually why I'm allocating 20p to Euro US dollar, 20p to dollar yen, and then only 10p to pound dollar, because I know that's a very volatile market. So again, all that just comes from experience, and you know, by the time you trade all these markets, you begin to notice the difference between each currency pair, and you know, that just comes with you just trading it and seeing what happens. Okay, so this is what we're going to do. Yeah, if you have questions, you can go ahead. Like I said, this is not a formal presentation per se. So if you have questions, I'm happy to answer your questions as we go along. Go ahead, Bumi.
Right. So why would you choose to trade the pound dollar, knowing the volatility, and not choose CAD dollar? Choose to trade against.
Oh, okay, that's a good question. But like I said, you can really trade any currency pair, so you don't have to go with my own choice.
But this one is very volatile. I mean, I did the first 3 trades I did against it. I lost £30. I've backed away a long time from the pound dollar.
Oh, I like it because, like I said, I like it because, like I told you, it can be very profitable. You know, pound dollar is a very good market to capture 100, 120 pips. So yeah, it works both ways. No, but again, don't do the.
Wow.
Don't
no. I'm not saying I'm a manageable person. I'm thinking long and hard before I go into this.
Yeah. So, but yes, but you're right. Actually, let me go to, because for this session, I'm actually using my FX Primers account. So let me just go to the platform. So if you look at, so just the answer to your question, Bumi. So you can see on my FX Primers account, which is the proper account I used to trade.
Yeah.
You can see all the markets I trade. So I trade Euro, US dollar, pound, dollar, Swiss franc, US CAD, dollar yen, Euro yen, Aussie dollar, New Zealand yen. So it's up to you. I'm just saying,
okay.
I just picked 3 to trade on the IG platform to show you guys that even with £500, you can trade 3. So I just took 3 at random. Right. So it could have been any. But I still like pound dollar because it can be very profitable. But that is why I'm allocating the least amount to it.
Okay. Right. Okay. Understood. Thank you.
Okay. So I'm happy Bumi has given that testimony too of how volatile pound dollar is. So yeah, it can be profitable, but at the same time, it can also be crazy. So yes, if you choose you don't want to trade pound dollar, you can pick any other markets. But I think the key is just the money management. That's the key. So the key is just knowing that whichever market you choose, just make sure it's still within your money management of when you're using £500, we're still going to go to 3,000 and above. So it's just to know that, you can, Euro US dollar should definitely be one of the markets because this is the best one to trade, as you all know by now. But once you want to start adding more markets to Euro US dollar, you can really add anyone. And it's a good thing I showed you my platform. So it could be any of them. But I just picked this 2 because one, it gives you exposure to the yen and the Asian market, and then this one gives you exposure to the crazy volatile pound dollar. But yeah, you can choose any 3 you want. But the key is just making sure it's still within your money management. 0. And again, if you want, you can still trade 5 markets like I'm doing and do 5, and then allocate 10 cents to 5 of them. But again, like I said, you need to be, let me actually go back to the platform again. Because like I said, you need to be very good at analyzing the market. Because again, when you're looking at the economic calendar, so for example, me now, when I'm looking at the economic calendar, I have to be worried about reports coming out from Europe, America, UK, Switzerland, Canada, Japan, Australia, New Zealand. So, it can keep you busy. So it might seem nice and fun, but you need to be aware that it keeps you busy. And then again, you have to analyze the market quickly. So you have to be able to go from Euro, US dollar, have a look at the trend, decide where to trade, have a look at pound, look at the trend, decide where to trade quickly, have a look at the dollar switch, the Swiss franc. You can see I still have a trade there going. And again, actually, this is another reason why I wanted to talk about this money management part too. The reason why it's sometimes good to trade multiple markets, but again, please be mindful. You need to be sure you know how to analyze markets quickly. But the principle of trading all these markets is the same. It's just that you have to do it on different markets. But the reason why it's sometimes advantageous to trade different markets, because as you can see today, although the Euro US dollar was going sideways, the pound dollar was going sideways, you can see the dollar Swiss franc is not really going anywhere. But you can see the dollar CAD took off. So that's the advantage you get sometimes where you trade multiple markets, so that when you're not getting some markets that are profitable, you might get one that's extremely profitable on that day. So that's the advantage sometimes of trading multiple markets. You can see the dollar yen is trending sideways. Same with the euro yen. Although with the euro yen, I've got a sell trade from a couple of days ago, the euro yen. Again, I guess it's same thing applies to with swing trading, because if you're looking for swing trading opportunities in all these multiple markets, the likelihood that you might get an opportunity. So you can see Aussie dollar had a huge fall today compared to the pound euro dollar, which didn't go anywhere, but you can see that was a huge fall with the Aussie dollar, and then with the New Zealand dollar. So this is just the advantage of trading multiple markets, is that, especially from a day trading point of view, it presents you with more opportunities. It presents you with more opportunities and the possibility of catching more moves in the market by trading different markets. But again, like I said, you need to be very good at analyzing your charts. That should be your primary goal, knowing when to trade, when not to trade, knowing which reports to ignore, which reports to check out, knowing about your trade, placing the trade. Because when I wake up first thing in the morning, or sometimes before I go to bed at night, especially for the Aussie dollar and the New Zealand dollar, and in the morning, I'm able to analyze all these markets in less than 10 minutes and place my trades. So again, that's why I'm saying you need to be careful. Don't just rush to start trading multiple markets and you get yourself confused and get yourself all mixed up and start to lose money and get yourself in a twist. But I'm just saying that's the first step is understand your trading plan well, apply your trading plan well, learn how to analyze the charts well and the economic calendar, knowing about reports, which reports are good and bad, which ones you want to avoid, which one you want to ignore. That should be your main goal. Like I said, always your main goal is to trade well. Now, once you are very comfortable doing all that, focusing just on the euro US dollar, I'm just saying that yes, the next step now will be the possibility of now trading more markets to get more opportunities, but still apply good money management. And that's the key, still applying the fact that even if you're trading multiple markets, and like I said, this is now down to a personal choice. So long as it's still within this £10 per trade you're risking, whether you want to trade only one market, two, as in do 25p, 25p, three, as do 20p, 20p, 10p, or do five markets, do 10p, 10p, 10p for five. Again, that just comes down to personal choice and how comfortable you are analyzing the market. Hello, Tolu.
Hi, Dr. Remy, can you hear me?
Yes, I could hear you.
Hi, sir. I had a quick question around timings. So how do we know what times to analyze? For example, the Aussie US dollar, I guess everything will be in the morning, right? Because we have different time of the day. So I know the clock changes, but then what time of the day? So now the clock has changed, right? So for the Australian US dollar as an example, what would be a good time to start analyzing the market? Would it be like 1 hour before they start the market? What time would the market start, and what time would be a good time to start looking at the markets type thing? And then the same for like China. Basically, how do we? Yeah, I don't know if I think I finished asking my question, but do you see what I mean? So it's just
no,
like
I do. But again, this is why I'm saying that I'm happy you asked that question. This is why I was emphasizing that you first need to be very comfortable with the principles of trading, because the is understanding the principles really, because the principles you're using to trade the euro US dollar does not change with the Aussie dollar, it does not change with the New Zealand dollar, it does not change with the dollar yen. The principles are still the same. So what I mean the principles are is that you know that there are certain things that would affect the euro US dollar. And of course, because the euro US dollar is the Europe and US, the reports and the things that affect the euro and US tend to come out when those markets are open. It's just the same as the Aussie too. So you will notice that actually, let me go to the website. Let's bring the website up. because you notice also that when you start trading the dollar yen, the Aussie dollar, you will find that the reports come out at 2 a.m. in the morning, 1 a.m. in the morning. So it's no different. It's just it's the same. The principle is still the same. It's still, and in fact, that's what I was saying earlier, is that, you know, that one shouldn't get excited and just rush to trade all these markets, because the same principles would apply. So for example, today, you can see the Australian inflation rate was announced at 2:30 in the morning. Obviously, that's Rwandan time. So that would be midnight UK time, or 1:30 in the morning Nigerian time, or wherever you are in the world, you check your time zone. So you can see if you are trading the Aussie US dollar, then you have to be up early in the morning to trade that report. See what I mean, Tolu? So it doesn't change.
Yeah, I do get it.
So like I said, the principles doesn't change. So if you're trading the Euro US dollar, yeah, you ignore this. You ignore this report. But if you're trading the Aussie dollar, then you have to be up at 2:30 in the morning, well, if you're in Rwanda, to trade this report. But again, don't forget, like I said, also, from Sunday midnight, from Sunday nights to Friday nights, the currency market is open, doesn't close. So even during the Asian times, when the Asian market is open from midnight, it's not as if the Asians are only trading Asian currencies. The Asians are also trading pound dollar. They're also trading Euro US dollar. So again, those times, you don't need to worry about that. Like I always tell people, you can basically start trading pound dollar or Euro dollar from midnight. Once the pivot points have been calculated after midnight, wherever your local time is, you can start trading any of the currency pairs. But of course, the things that could cause problems, which is economic reports for the Asian currencies, they come out, you know, obviously around the Asian market times. So again, that's the beauty about the trading currencies. You're not like the stock market, where you need to be mindful exactly what time the stock market opens. You're just having a rough idea. I don't personally try and find out the exact time Australian market opens, or the exact time the Chinese market opens, or the exact time. I just know from midnight to 5. That's just a rough guide, and that's all I need. And then I don't care about +1, +2 clock going forward or back, because it doesn't make a difference to my trading. What I just need to know is that at midnight on my own platform, again, this is where everybody has to check their own time zone and their platform. But at midnight on my own platform, I know the pivot point lines will change, and they'll have a new pivot point for the day. And from at that point on, I can start trading any of the currency pairs. Obviously, we all have a life. You want to go to bed, you have work the next day, so you don't do that. But technically, you can, from midnight, start trading any currency pair. But again, you still apply the same principles. So again, let's go back to today. So for example, although you could trade the US CAD, from midnight, but because there was a Bank of Canada interest rate decision due out today, then you will not trade it from midnight. You still have to wait for the report at 4. So that's why I was saying earlier that the principles that we taught you about trading apply to any currency pair and any currency. But you know, it's just you, and that's why I said earlier it's the key is to focus on one market first, and make sure you understand all these principles, how to apply them, because once you understand the rationale behind each principle, how to apply it, then it really doesn't matter what market you trade after that, because you then know how to apply the principle to it. So yes, you can really trade any market at any time. But yes, if you're trading the Aussie dollar, the reports, or if you're trading the dollar yen or any of those Asian currencies, really, most of their high reports of high importance come out between midnight and 5 o'clock in the morning. So if you know you can't do that, then you probably avoid trading those Asian currency pairs, and maybe like you say, look for dollar card or the ones that don't have yen or Aussie dollar, New Zealand dollar attached to it. Let's see.
Got it. Thank you, sir.
Pleasure, Tolu. Hi, Bumi. Do you have another question or is your hand up from before?
Oops, I'm sorry. Gosh, no, I don't have another question. Let me put up my hand. Sorry.
Okay, no problem.
Thank you.
Lara HP, I was hoping you would trade on the NAS 100. Is that the NASDAQ you're talking about, Lara? There are two Laras here. There's Lara HP and just Lara.
Yes, it's the NASDAQ. Hello.
You want to trade the NASDAQ?
Why not?
Yeah, why not? But again, the question is whether you know how to trade indices. Do you trade indices?
Well, I'm learning. I've started playing on that, so I was hoping you would say one of them as one of your.
No, I think again the okay, maybe I'll have another session in the near future on trading indices. So you can see I traded the Dow Jones and the FTSE 100. But again, if you know how to trade indices, you can really trade any indices. The NASDAQ is just not as volatile as the Dow Jones. S&P 500 is crazy. It's very volatile. And the DAX is actually a better index to trade. The DAX 30, the German index. But anyway, don't let me go into a lecture on indices. But basically, if you want to trade indices, there are a few things you need to be wary about or understand before you trade indices. Because it's interesting, you know, I was talking to Tolu about you don't have to worry about the market opening times when you're trading currencies. You don't have to be specific about the market opening times. But when you're trading indices, you definitely need to be sure exactly what time the market opens, exactly what time it closes. So if you want to trade the NASDAQ, you need to know exactly what time the NASDAQ opens. You need to know exactly what time it closes, because that's when it will be active for you to start to trade it and make money. So you need to know exactly the opening time and be ready to trade it. You need to know what affects that index. Of course, for you to know what affects that NASDAQ, you need to know the companies that are listed on the NASDAQ, because the companies listed on that index is what would affect the price of the index and what you're trading. So there's more information you need to be aware about when you're trading indices. So again, you have to be aware of earnings seasons. So during the earnings season, just like you see now with the Dow Jones is falling, obviously you've got the combination of the earnings season and the elections that's making the market fall. So when you're trading indices, just like currencies, there are certain principles you need to understand when trading indices, which you can now apply to all indices, whether you're trading the NASDAQ, S&P 500, FTSE 100, Dow Jones, you know, the DAX, the Aussie 200. You could, so just like the currencies too, once you understand the principles of how to trade indices, you can really trade any of them. And I think now that you brought it up, maybe I'll do a session in the near future on trading indices. But trading indices, unfortunately, is not as profitable as trading currencies. And also, you know, like I said, it requires more information and more knowledge and more work compared to currencies. But yes, I'll probably, now that you mention it, I'll do a session on trading indices in the near future.
Thank you.
Pleasure. Okay, so this is just the basics. So we've just gone through how you can begin to trade multiple markets, even with your 500 pounds or $500 using money management. So you can see with the same $10 you're risking per trade, you can split that $10 into 1, 2, 3, 4, 5 markets, depending on how comfortable you are analyzing multiple markets at the same time. Okay, so that's step one. And like I said, yes, the other thing I was sharing with you is the is the fact that, yes, the advantage of trading multiple markets is that, yes, while one market might be not profitable one day, just like you found today with the Euro US dollar, you know, we didn't make any money trading the Euro US dollar. So while you might find one market not being profitable, you might then find another market being extremely profitable. So you can see Euro USD wasn't very good today. Pound dollar wasn't good today. You can see the dollar Swiss franc wasn't good, but dollar CAD took off. Dollar yen, you can see it just trending sideways. Euro yen today is trending sideways, although yesterday there was a huge fall. And again, you can see a huge fall in the Aussie dollar and the fall in the New Zealand dollar. So this is sometimes what you can benefit from trading multiple markets, is that while one market might be sluggish, you might capture moves in another market. So you're sort of diversifying and spreading your risk and spreading the chances of you actually making money. But it has to be done within your money management, Okay, so let's now come to 3,000 and above. Now, when you're now trading 3,000 above, as you know, you only risk 2% of your capital per trade. So this is where you have to bring out a calculator. So it's always 2% of whatever capital you have in your account that you risk per trade. So like I said, again, this is not exact mathematics. It's just done to make it simple. But when you are trading, you need to make it exact. So it will be 2%. So like this here, so the first trade is 2% of 3,000. So that means for your first trade, you can afford to lose $60 on this trade. And you can see when it drops down to 2,890, where you're now going to place your trade, it will be 2% of 2,890. So it's always 2% of whatever capital you have in your account. And that's what you risk per trade. So let's start with this 60. So for example, now you now want to trade with 3,000 pounds or dollars. So you now work out 2% of 3,000. So 2% of 3,000 is 60. So that means you can afford to lose $60 on that trade. So now that you've worked that out, and then you now go to trade. So that's the first thing you want to work out, how much you can afford to lose on that trade. So we've now worked out we can afford to lose 60 pounds. So that means regardless of what we do with our capital of 3,000 pounds, so we know regardless of what we do in this trade, which is just plus as one trade, regardless of what we do in this one trade, we're only going to lose 60 pounds. Now, you now divide your risk. You divide your risk by your stop loss. So we are risking 60 pounds, so we can afford to lose 60 pounds. So that's 60. And as you know, I use a stop loss of 20. So that means divide by 20. 60 divided by 20 gives you 3. So this shows you that I've now worked out I can now risk 3 pounds per pip. Okay, so you can see that's how you work it out. So you start off saying, okay, I have a capital of 3,000 pounds in my account. So for the trade I'm about to place, I can only afford to risk 2% of that. 2% of that is 60. So that means I can only afford to lose 60 pounds on that trade. Now I divide that 60 by my stop loss, which is 20, and that gives me 3. So that means I can afford to risk 3 pounds per pip. So you can see if I risk 3 pounds per pip and I lose 20 pips, that's 3 times 20, that means I'll lose 60 pounds. So I have now worked that out, so that's how much I can risk per pip. And again, going to my IG Live account in the UK, since we know volume of 1 is $1 per, or £1 per pip. So now I know I can use a volume of 3. So volume of 3 will mean I'm risking £3 per pip on the IG spread bet live accounts in the UK. I have to keep stressing that because, like I said, it can vary in different countries and on different platforms. So please always check with your broker, your live account broker. So now that I've worked this out, again, like I showed you in the previous slide, I can now play around with this. So if I want, I could just do one market. I could just trade Euro US dollar alone and just risk the whole. I just set a volume of 3 and risk the whole £3 per pip on one market. Or I could do $1 per pip on 3 markets. Yeah, you know what I mean, dollar yen. So I can add that, so I can split that volume to 3. So it can be £1 per pip for 3 markets. Or again, you can then, if you want, you can then short it down to 50p per pip and do 6 markets. So even if you lose out on all 6 of them, it's still regarded as one trade. So you can see this is where you start having more fun trading, and it might become more profitable. But again, you need to still know what you're doing. And that's what I mean on the chart where it says here that the trade can be broken up into different markets. So once you calculate that you're 2% of your capital that you want to risk per trade, it will be 2% of whatever is in your capital account. And like I said, once you work that out, like I showed you, then if you want, you get that trade can be broken up into different markets. And even then, as part of your spread, you can say, just like Lara mentioned, now that you worked out a volume of 3, you can even say, okay, I'll trade Dow Jones 0.5. So that could be your 6 markets. You could do 3 currencies and 3 indices. Do 0.5 Dow Jones, 0.5 FTSE, and 0.5 NASDAQ. So even if you lose out on the 3 indices and the 3 currencies, it's still all under one trade. So you can see that's now the beauty of money management, because once, this is why I always said right from day one when we talked about trading, once you understand money management, and this is why we're doing the part 2 now, and how to apply it, you can see now you can do what you like. So basically what money management is saying is that once you've worked out how much you can afford to lose, it's up to you, do what you like. So long as you don't lose more than $60 on that one trade, you can do what you like. Same with the 500 pounds like I showed you. The key is not to lose more than 10 pounds per trade, period. But how you lose that 10 pounds is up to you. Whether you lose it with one market, trading one market, you lose it with trading 2 markets, you lose it with trading 5 markets, it doesn't matter. So long as you do not lose more than 10 pounds. And here too, so long as you don't lose more than 60 pounds, that's fine. How you want to lose that 60 pounds is up to you. You can't just lose more than 60 pounds. So how you want to split it, like I said, you can trade just one market, you can trade 3, you can trade 6, so long as it all adds up to 60 pounds that you're risking on all those markets at the same time, it is totally up to you. So this is where the fun comes out in trading, and where you can start to mess around and do a variety of things, all within your money management. And then finally, let's go back to the charts. So like I say, if you go to 200,000 pounds, again, it's still the same. You're only risking 2% of your capital per trade. You only risk 2. In fact, this is the one I really want to talk to you about, because this is where people fall foul of trying to copy other traders, where you don't know what kind of money management they're using or what capital they have in their trading account. So for example, if you're trading with a capital of $200,000 or pounds, again, it's still, like I said, once it's 3,000 and above, it's always 2% of your capital per trade. So 2% of 200,000 is 4,000 pounds. So this guy or lady, or this person, this guy or lady, trading this account with £200,000 can afford to lose £4,000 on one trade. On that, their first trade, they can lose 4,000, which is 2% of 200,000. Now, this is where people run into trouble. So like I said, you have 200,000 capital in your trading account. 2% of that is 4,000. So you know you can afford to lose 4,000 on your trade, on one trade. But don't forget, it's always 2% of what is in your account. So obviously, let me go back again quickly. So as you can see, if you lose 4,000 on this trade, your account drops to 196,000. So 2% of that is 3,920. So the same thing is 2% of whatever capital is your account is what you can afford to risk on that trade. Now, going back to that, so you can say you've worked out that you can afford to lose £4,000 on this trade, on one trade. Now, this is where people fall foul, because all of you on this trade, on this platform now, I think you've been trading for at least a week or more. And you can see that it's very, I don't think you've noticed, or it's very rare for the market to fall 4,000 pips in one day. It's extremely rare. It's like hen's teeth to notice that the market fell or went up by 4,000 pips in one day. That it's not something that you probably see in your lifetime, to see the market either fall or go up by 4,000 pips in one day. Now, why I'm saying that is that this guy or this lady with this account of 200,000, she can afford to say, I will not trade with a stop loss. So they can just, she can just, okay, I'm not trading with a stop loss. And she can just do a volume of 1. So just risk $1 per pip and not apply a stop loss. Just risk $1 per pip, but not apply a stop loss, knowing fully well she has £4,000 she can afford to lose. And this kind of person can afford to trade without a stop loss because they know they can afford to lose £4,000, and they know the market is not going to fall or go up by £4,000 in a day. So this person can decide, okay, I'll just do a volume of £1 per pip and not place any stop loss and see what happens. And then this is where some traders make the mistake, because a trader now with maybe £500 with their account will now hear that there's somebody trading without a stop loss and want to follow that person and trade without a stop loss too, not knowing that the person has a capital of 200,000 compared to their own 500,000. So by the time this person is wiped out from the market going against them without a stop loss, this person will still be in the market. So it just goes to show why money management is so important. Because once you've worked out how much you can afford to lose, you can now play with the rest. So this person with 4,000, they can afford to lose 4,000 on their trade. So, you know, they can say, okay, 4,000, I'll do 40 pounds. They can do 40 pounds per pip and trade 10 markets. So you can see they can do 40 pounds per pip and trade 10 markets. That was still 40. Oh, no. My maths is wrong, but you know what I mean. I think I've told all of you I'm a medical doctor by profession. I can't do mental maths, but you know what I mean. They can play around with this. Actually, let me do it properly. So 40,000. I'm sorry, 4,000, not 40,000. 4,000. Let's just say, for argument's sake, divided by my stop loss of 20 pips. So that's 200. So that's 200. Yes, I'm correct. So that's 200. So that means this person can afford to risk, if they're using a stop loss of 20 pips, they can afford to risk £200 per pip. They can afford, using a stop loss of 20 pips, they can afford to risk 200 pounds per pip. And now they can then change that to now do 20 pounds per pip and trade 10 markets. So they can then do 20 pounds per pip, trade 10 markets, and then they can now use a volume of 20, doing 20 pounds per pip, and then trade 10 markets. And if they lose doing a volume of 20 pounds per pip and trading 10 markets, they can now do, 7 different currency pairs and 3 indices. And if they lose out on all of them, it's still regarded as one trade. So this is the beauty I just wanted to highlight with this session about money management, that once you work out how much you can afford to lose on that trade, which is the most important thing you should work out first. Like I said, with the person trading with $500, the maximum you want to risk per trade is $10. So now that you worked out that's the maximum you want to lose per trade with $10, how you choose to lose that $10, whether with 1 market, 2 or 3 markets, again, is up to you. If you're doing 3,000 and above, you work out 2% of what you're risking per trade. And once you've worked out how much you're planning to risk per trade, again, how you choose to lose that amount of money is again up to you. Whether you increase your stop loss, whether you don't use stop loss, whether you trade 2 markets, 10 markets, again, you can play. It's just going to show you that this is how you have flexibility to play around, trade different markets, use different strategies, mess around with your stop loss. But you can see that regardless of what you do, it should all still be within your money management. Okay. All right. Any questions? As usual, this recording will be posted on the platform. So you can access once it's finished processing, either this evening or tomorrow morning. I'll post it on the trading platform. So any questions? If you have any questions, you can either send it through the chat box or you can raise your hand and ask questions. So
sorry, Remy, could I ask you? So do you that report that's showing at 2:30 a.m. that Australian report, and you're trading an Australian pair, New Zealand Aussie, is it Aussie? Are you going to get Rwanda time to trade this?
Yeah, you set the alarm. I set the alarm half an hour before the report.
All right.
Place my trade and then go back to bed.
Oh Lord, right, okay.
But like I said, you don't have to do that.
I wanted to find out all these other Asian markets. So is that what you do? You've Japanese yen one there. So you wake up at that.
No, I think again, this is why I'm saying it's an individual thing, because I'm
not even going to. I'm not.
Okay.
I'm just trying to find out what you do.
Yeah, because don't forget, I don't work for anybody. I work for myself. So what time I wake up in the morning or what time I start my day is totally up to me. If I want to sleep in the afternoon, I can sleep. I can catch up on my sleep then. So my time is mine. I can do what I like. But again, to be more specific, again, this is what I'm saying. If you know what you're doing, and that's why I like the pivot point strategy, because I just have to wake up half an hour before the report, switch off my laptop, assess the market, look at the charts, place my buy and sell. I already know my money management. I have my stop losses in place. So I don't even wait for the report. I just pace my trade and go back to sleep.
Right. Okay. Ooh, yes.
When I wake up, I see what happens. But you can see again, I just wanted to show you. You can see this is for tomorrow.
Somebody has said a quick trip to Asia.
Yes. Exactly. Well done, Opubo. Well done, Opubo. That's a good one.
Thank you. Thank you very much. I shall go to Asia and resolve
Now
that
this
then,
is
okay?
this is actually for you again, Bumi.
Yeah.
See tomorrow the 29th.
Yeah, I'm looking. Okay, yeah. So that is on 10
see,
minutes to 2
no,
in the
see
morning.
5 o'clock tomorrow morning, the Japan interest rate comes out.
Hey. I've just entered gear 3. My
Yeah.
C4. That's all. What?
But I'm
Okay.
lucky because this is GMT +2. So 5 o'clock tomorrow is actually roughly the time I normally wake up anyway. So that's fine. But this is obviously 3 a.m. for you.
Okay.
And of course, these are the sort of reports that will move the market. So if you're trading euro yen or dollar yen or any currency paired with the yen, if you miss this, you're going to miss out on a possible profitable trade.
So what I would do if I was trading that one, I would just set my trade after midnight, where the pivot points would have chatted, and just go to sleep. Whatever I find the following morning.
That's dangerous. No, that's dangerous because again, don't forget this is coming out at 5 in the morning. So if you set your trade up at midnight, the market could take your trade at 1 a.m., which is very early, take you out of the trade, and you might not actually be around when the report comes out.
Ugh. I shall stay out of that market. That one is not.
Exactly.
Market is not for me. That currency is not for me.
Exactly. It's better that way, because as you know, the plan is to place your trade just before the report is due to be announced, not 5 hours before. So, like you said, either you travel, like people says, either you travel to Asia, you wake up early in the morning, or you forget about it and pick another currency pair.
Thank you.
Okay. So how much do you make a day on all 8 markets? Enough. I don't like answering the questions of how much I make, because when I tell people how much I make, it has no relevance to what they're going to do or how much they're going to make. It would not make any difference, because it all depends on what you're doing and how disciplined you are and how you face your own markets. Because just like Bumi was just saying now, if you're now going to follow me and trade all these markets and you don't want to wake up at this time to trade it, then you might miss this opportunity. So you might not get the same outcome as me. And again, it's interesting too. Like I said, we're all trading together the euro US dollar. Like I said, I opened a live account for the IG platform last week, Monday. But I'll be surprised if we all have different results, despite the fact I am posting my trading plan every day on the euro US dollar, what I'm doing, what trades I'm placing, what I'm doing every day on the euro US dollar is being posted on the online platform. And I post my account sheet on every Friday. And I'm sure we probably all still get different results on the platform because people just do different things and crazy things that it's up to them. So I know that that's just the reality of life. So I usually know that, telling people I make X amount, it doesn't mean they're going to make that same amount themselves. Do you have another question, Bumi?
Yeah, the sell when we're putting in a pending order to sell.
Yes.
When we want to do the buy order, when it's I guess when the last number is 5, either 5 or 6, we round it up to we take it up a higher number. So if it's 1795.5 or something, we make it 1796, and then you put the 2 pips on top of it.
Yes.
Right. When we do the sell, right, when you're doing the sell order, don't you take it down? Because I would take it down. So when it's like 1795.5 or something, I would take it down to 1794, and then take the 2 off it. Because I recall there was a time I was still in the trade and you had gone out, and I was kind of trying to figure out, what did I do wrong? Why am I still in the trade? And
I
you
won't
have
worry.
been taking that, and then I realized that was well, I was happy for that.
I won't worry about that though. That's, I think, that's splitting hairs.
Right.
Yeah. So yeah, I think that actually that's a good question you asked, because the key is, so long as your okay, looking at the chart here, so long as your sell order is somewhere below your entry point and your buy order is somewhere above, because I know some people, some trader friends of mine, they actually use 4 pips above and 4 pips below. And I know some people who do 1 pip above and 1 pip below.
What? Wow. Okay.
So that's what
Okay.
I'm saying. It's really splitting hairs. So I think that, but the key thing is that you don't want your order just right on the pivot point or right on the first support. You know what I mean? So
Yeah.
that's a definitely no. So you don't want your order just exactly the same as this line.
Right. Okay.
But how many pips above, how many pips below? It's really, it's a personal thing, and you'll find that if you speak to different people, it varies. Some people want to be extra cautious, and they will say they want it 4 pips above and 4 pips below. They want to be 100. They want to be 1,000% sure that it's broken. So yes, I wouldn't worry about that. So
right. So I have one last question. Now it's Friday. Your trade has been taken, and we're getting to 6 o'clock, and it's, I don't know, maybe you're already in the trade, but it's a losing trade.
Yes.
How do you close that? Because I have not managed. Well, I've managed to kind of bring down the stop loss to as far as I could possibly bring it down to, but I have not been able to just close that trade until it hits that stop loss. So when you say we shouldn't let the trade run over the weekend, but when I'm now trying to close down that trade because it's 6 o'clock or something, but the trade has already been taken and it's still, I don't know, maybe it's like still minus.
You just right click over it and click close order. That's all. Just close the order.
But it didn't work. Really? Maybe it works on Primus. It doesn't work on this one, though.
No, it works on IG. Last week, it does.
Really? I kept on. I stayed there until I got so close.
No. I think if you're trying, that's what. Let me bring the order up. You shouldn't select modify order. That's the problem. So that's what I'm saying. If you look at the options here, you have modify order, close order. So you select close order. That will just close your order.
Right. So when it closes the order, so it will close it and it will just close it at
wherever it is there. Wherever it is at that point.
Okay. Wherever it is there. All right.
Yes. So wherever it is, it will just close it. So if you're losing money, you will realize your loss. If you're making money, you realize your profit. Wherever you are, if you're at -5, it will close you and you lose 5 pips. If you're at -15 pips, it will close you and you've lost 15 pips. If you're at +2 pips, it will close you and you've made 2 pips.
Oh, because I was wondering, how is Remy closing this thing? I'm going to.
No, I think I know what you mean, because if you try and modify the order and you're close to the stop loss and you're close to the market, it might not allow you to modify the order.
Yeah.
So that's what you're trying to do.
Okay. Yes.
So,
yes.
So like you say, on Friday, you should just right click and select close order. Just close it.
Right. Okay. So that was what you did. Right. Okay.
In fact, let me show you what I mean, because you can see here on this dollar Swiss franc here. Yeah.
Yeah.
You can see that I'm currently losing -0.26. Isn't that right?
Yeah.
Actually, let me go to the chart itself. So if I try and bring it to the opening level of 9100, you will see now 91. So if I want to change the stop loss to 9100, you can see it will not allow me.
Okay. Yes. That was what I was. Yeah.
Exactly.
I kept on. Okay.
Because it's you're too close to the
close
current
to the
level.
Price. Okay.
Yeah, exactly.
All right. Okay, the price level. Right. Okay.
But if I want to close it, which I don't want to do, it will close. But if I just
okay, they will just close it. Right.
Yeah.
Okay. right, thank you.
Pleasure. Sawa sawa.
Yes, I was. Is that a Rwanda term?
Swahili for no problem.
Oh, okay.
Any other questions? Let me check the question box. Okay, good. So no questions in the question box. So if there are no questions, I wish you all a good evening. Like I said, I've noted the comment about indices, and we actually start the November course. The November trading and investing course starts, the specially arranged course starts next week, Monday. We're actually doing 3 sessions a week. So basically Monday to Friday, every evening, I'll be doing a course session on either trading or investing. So we might not be able to do an evening session in November, but we might do the next evening session. Obviously, the Tuesday morning sessions will still go ahead. So we'll still be doing the Tuesday morning sessions as normal. But the evening session, like I said, I would schedule a session for us to talk about trading indices, but that might be possibly the first week in December. Opubo, yeah, your question didn't come through. I didn't see. Oh, I've seen your question now. Sorry, I've seen your question now, Opubo. Have you been in a scenario where you had 5 consecutive buy trades in 5 successive days and there was no opportunity to sell, or vice versa? Not that I have noticed. It's not something I've been mindful of, Opubo. That's interesting. I can't say I've noticed that, but at the same time, it's not something I'd observed or looked out for. But that's interesting. Even if it had happened, I don't think I would have noticed because I wasn't looking out for it. Where you have, but I think it's unlikely because for you to have 5 days of 5 consecutive buy trades, it means the market was going up and up 5 days in succession, which very rarely happens. Or, because as you know, the market goes up, comes down, goes up, comes down, then goes sideways all over the place. So for you to have 5 days of consecutive buy trades, that would mean the market was going up each day for 5 days. So I think, although like I said, it's not something I've observed or noticed, but just from my knowledge about the way the market moves and the trends, I don't think that's something that rarely happens, because 5 consecutive days would mean the market has been moving 60 pips every day up, moving up 60 pips each day. So no, I don't think that's happened. Or vice versa too, falling every day for 5 days. I mean, you could have one or 2 days of a huge drop, like you see here with the Dow Jones. So with the Dow Jones, you can see today there's a huge fall in the Dow Jones. Tomorrow, it might fall again a bit, but you might find the third day will go sideways. Again, don't forget, we talked about that during the course, that be mindful trading the market after a huge move, one day, because the next day it tends to trend sideways. So yes, I don't think that happens. I hope that answers your question, Opubo. In fact, if I have 2 consecutive days, let me put it this way, another way, Opubo. If I have 2 consecutive days of 2 buy profit, so if on Monday I place a buy trade and I'm profitable, and on Tuesday I place another buy trade and I'm profitable, I'll be very wary about putting another buy trade on the 3rd day, because I'll be worried it's going to go sideways. But obviously, you still take each day on its own merit. But yeah, it's unlikely. Okay, any more questions? Let me just check the question box again. Let me make sure I haven't missed out any questions. Let me do this slowly. Okay, so no more questions. Any more questions before we call it an evening? Okay, so good. If there are no questions, like I said, the recording will be posted on the platform. The Tuesday morning sessions will still hold every Tuesday morning as usual. And of course, in between all that, you have my post on the platform. So I wish you all a very good evening. And don't forget money management and happy trading.